Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and strategies. Hello, I'm Michael Bull. Thanks for joining us on one of the radio stations, iTunes or YouTube. We appreciate it and like it that you are here with us. This segment is brought to you by GetValuate.com. This is an interesting site where you can do an investment analysis and share them with colleagues online. Check it out at GetValuate.com. And today we're going to talk about a sector and a segment of commercial real estate that seems to have a growing interest, and that is self-storage. A lot of people from REITs down to individuals and everyone in between has become more involved in and interested in self-storage. That's what we're going to talk about today. Please welcome my guest, David Westbrooks. He's president at Georgia Mountain Storage, and he's here in Studio One. David, thanks for being with us.
Hey, excited to be here.
We also have Graham Hill here with us. He's president of the National Self-Storage Group with Bull Realty. Graham, thanks for being with us.
My pleasure.
So, gentlemen, how are you finding the market today for self-storage? It seems like a lot of people are interested in the sector.
Very hot, very popular right now.
Yeah. So a lot of people want in, huh?
They want in. It's like a gold rush.
Gold rush. Does that give you any concerns?
It does for me in some areas of town, the possibility of being overbuilt, like people rushing in, building too fast, and maybe creating too much supply.
Yeah. And Graham, what do you see in the market? Is this a buyer's market or a seller's market? Or?
Well, it's really a seller's market, but there's many, many more buyers than there are sellers.
Yeah.
It's like people are very hesitant to let go of the self-storage facility. I mean, there's circumstances like the death in the family, or for whatever reason, properties do come up on the market, but it's you've got to pry them out of their hands now. They're not ready to part with them.
Well, let's talk about some of the values that you're seeing today. So let's first talk about some of the more institutional, high-quality, larger types of properties. If a buyer comes to you for one of those today, what are they going to have to pay cap rate-wise?
Well, if it's right downtown or right the double A spot, it can be in the fours.
Really?
It's amazing. I mean, the price of money that the big REITs can get, or the cost of money, is really changed the game. And it's interesting because it's rolled down to where a lot of the smaller players have the same high expectations, which are unrealistic.
Get me a 4 cap rate for my 20-year-old property.
Right, yeah, and it's like an 8.
So if I have a new facility, it's in a great A location, and I've built it, and I'm starting to fill it up, and say I'm halfway full now, and I'm not really at capacity yet. Could you sell it for me now?
I could sell it for you the day you get your certificate of occupancy.
Okay.
And statistically you break even when you're 46% full.
Okay.
So it used to take like 2 to 3 years to fill something up.
Yeah.
People get to break even in 12 months, even less. It's amazing.
Okay, so you're talking 4 to 5% range for these institutional quality properties, but what about a property that's maybe 10 or 20 years old, and maybe it's out in suburbia somewhere? What kind of cap rate ranges you see for that?
It depends exactly on the property, but
Sure.
you're looking between mid to low 7s to 8.5, depending on where it is. I mean, if it needs new roofs, new doors, and you've got some immediate work to do straight away, that's going to affect the price. But if there's 2 acres of land that come with the deal, that's also another good thing. If it's in an incredibly quick-growing or fast-growing community, and the highest and best use is going to change within 5 or 6 years, there's a lot of factors that can affect the value.
Yeah.
He sold one of our properties in Norcross for 6.4%. That's what it came in.
Okay. Yeah, well, that sounds like a pretty strong cap rate for a property. What size range was that?
It was a mid-sized property.
Yeah.
And it was 15 years old, or 20 years old?
Yeah, about that, and it had about 45,000 square feet.
Yeah. So there's a lot of different ways that our viewers and listeners can get into investing in self-storage, and one of them is through the REITs. But it's not really a REIT-driven market. There's a lot of mom and pops, a lot of small operators, but the REITs have been really growing, haven't they, Graham?
Well, the REITs represent approximately 10% of the marketplace, but they're that's the publicly traded REITs. Then there's a large section of private REITs too that's growing very quickly, but it's well over 60% single unit owners or that own one or two.
Yeah.
So, but what's happening with the private REITs? They're moving down. They've run out of places to find in the primary spots, so they're moving more and more into the secondary markets, wanting to find places where they can expand it and convert it. So it's there are economies of scale that they bring to the party that mum and pop don't have. They can still make it work for them as they get further and further out to the suburbs.
I see. And then you talked about maybe some concern for new supply. So what are some of the demographics that some of these larger players maybe building a new facility are looking for?
Well, if they're looking in town, they're wanting at least 50,000 people within 5 miles, or actually more, like 30 to 40 within 3 miles, because the denser the area, the better, because the cost of building as they go up multi-levels as such. They want a lot of people. At least 20,000 cars per day, or maybe even more, or passing traffic, and great visibility is a key factor.
But David, you've done well with some properties that have kind of been in suburban areas, right, that didn't have those kind of demographics.
Correct. We started out in Alpharetta and Peachtree Corners area, and we did a couple of Section 1031 exchanges by selling properties through Graham and Bull Realty. We did those, rolled the money over into some outlying areas.
Yeah, it's interesting. So what are some tips for our viewers and listeners, guys, if they've not been in self-storage, they want to get started, they want to get going into the industry? You said it's kind of hard to find a property. Should they join the associations and maybe start learning a good bit about it, and then maybe build a relationship with a broker like you that kind of focuses on the industry?
Definitely, I think they should do both. Georgia has a great self-storage association that I've found to be a tremendous
And it's part of the
resource.
National Association, right?
Yes,
Yeah.
yes. Well, they're all individual affiliates of the national deal. I'm not sure exactly what the structure is, but this is both of us have benefited immensely from contacts and people that we've met through there. They had a big meeting yesterday. I met 3 or 4 people there that were there for the first time, with their primary interest being to find out more and get to meet people in the industry, because there's everything from builders to vendors to suppliers to legal advice,
Lenders.
It's a great spot to start.
Yeah, and we'll have a link to the National Association so you can check them out on the show website at commercialrealestateshow.com. Now, you mentioned financing. So what type of financing are you seeing on some of these projects that you've closed on, David?
I've been able to get 90% financing with the SBA.
Nice.
So we formed some strategic alliances with the SBA, and we've been able to get it done.
That's nice. So what kind of interest rates and things?
We were in the 4% range. The interest rates are rising right now, but we started out and had several in the 4% range.
Yeah.
Pretty good.
That's interesting. As far as underwriting, are lenders pretty happy about the self-storage industry? Pretty excited about it.
At one time they were not. When the economy crashed around 2007, they were getting kind of leery of it, but they've warmed up to it, particularly moving forward. They want to see that you have experience, and once you have that experience, they're willing to go with you. Plus, it's becoming more and more popular. I think occupancy rates now are well above 80% at most places.
Yeah, and so what do you expect moving forward, you guys? I mean, you talk about new supply. It seems like the economy's robust. Jobs have been growing in most markets. What do you expect moving forward for self-storage performance?
I think it's still a growing category. I don't think it's going to grow quite as quickly. It's going to sort of level off a little bit and sort of seek its own level, but then continue to grow as population grows. I mean, Atlanta had some ungodly a number of people moving here every week, and when we first started working together, David's SBA loan on his first building, they wanted 25% down.
Yeah, 75.
The next time it was 20%, and then as he got better and better at it, now it's 10. So it's that's been very helpful for him. But I have every confidence in the self-storage industry. I think it's here to stay.
Yeah, well, that's excellent. Well, we're going to take a short break. When we get back, we're going to talk about some of the legal issues, some of the concerns that some of the industry people have about self-storage, give you some tips for operations. And if you will, comment, connect with us on Facebook, on LinkedIn. You can find all of our social media contacts at commercialrealestateshow.com. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.